Like you said, it's been a very rough. First of all, let's start with the week that was, right? Because if you take a look at the 1 week span, that kind of 9% drop that we've seen overall in the S&P 500 all the way down to where we are right now, bit of a bounce, means, according to Howard Silverblatt over at S&P Dow Jones Indices, that the S&P 500 just last week alone lost $918 billion in market value. So that's how steep that drop was for the S&P 500 companies out there. Nothing to sneeze at. If you take a look at the year-to-date period, or just like the last month or so, if you look at the last month or so, well, this is the week. The week was 918. Now, if you take a look at the overall month of October, we are still down by about, you can see here, look at that, about $2.1 trillion with a T. That's how much market value has been lost with the S&P 500 at this point. That's something to keep an eye on as we talk about people deep value hunting for some of these stocks right now. A lot of stocks in the S&P trading below their respective long-term averages. Also something to keep an eye on as well. The utilities are outperforming this month. Maybe no surprise there. The only positive sector in the S&P 500 versus consumer discretionary, driven in no small part to Amazon's disappointing results. That gap right there is pretty wide. So again, a 2-point gain for utilities, a near 12-point loss for the discretionary. That's going to be a gap that we're going to be watching as well. And of course, from the overall technical standpoint, we've looked at this 200-day moving average for quite some time. This idea that you could see a bounce there from a trend line perspective. If you take a look at the S&P 500 during that time span, this 200-day moving average going all the way back at least through time. This move here lower that we've seen is the furthest down we've dropped below the 200-day moving average, that long-term trend line, since the beginning of 2006. That ultimately resolved itself in a nice bullish move to the upside. So Joe, gang, as we talk, we know what the bearish parts of the market are, but that might be one reason the bulls are saying, hey, maybe this does represent a good point to get into. The market rally from the lows of 2016 higher were pretty substantial, guys. Back over to you.